What's going on, ladies and gentlemen? Welcome back to another video. So this video we're going to talk about short selling. So we're going to talk about kind of what it is, kind of what the process is, what some of the requirements are in order to do it, kind of talk about some of the risks involved with it, and then we'll go in at the end, we'll actually demonstrate in TD Ameritrade and Thinkorswim how the process works of shorting a stock. So we'll jump right into it here. So what is short selling? So it's a process by which you sell shares you don't own. The broker lends you shares to borrow on margin. The shares are then sold with the intention of profiting on a decrease in stock price. So this is counterintuitive to how most people think the stock market works, which is you buy shares and you sell your own shares. You actually can, if you have the ability to borrow with a margin account, you can sell first, in theory, borrow shares, sell those shares, and then buy them back at a lower price. So the way it works is it's really no more complicated than just a reverse buy and sell. So if the process for taking along is you buy 100 shares, you sell 100 shares, that closes the position. This is just the opposite of that. You're going to sell 100 shares first, you're going to buy back 100 shares and close the position. And so if the price decreases from where you shorted it, you'll make money. But if it goes up, you're going to lose money. So this cannot be done with a cash account. It's a margin account only. So you do have to have a margin account with your broker. And so what happens with margin dollars is basically they, in theory, give you money to trade with that you don't actually own yourself, but you're responsible for the losses. So this is how you're able to short. So if you have a cash account, you can only sell your own shares. So I have a cash account that's an IRA, and I have my day trading account, which is a margin account. So there's no selling in that period. You can only sell your own shares. And so because you're using borrowed funds, and because there's in theory no limit to how high a stock price can go, shorting does carry limitless risk in theory. So a really good example of that is like GameStop here recently. That went from, what was it, $5 a share to $500. Previously had an all-time high of like $60 at a decade ago or something, but now it went to $500, and a bunch of hedge funds got blown out and lost a bunch of money. And so this is what I mean by it carries limitless risk, because in theory, if you buy, let's say, 100 shares of Apple, the worst case scenario is the stock price is going to go to zero. You're going to lose your initial investment, but nothing more than that. And because of that, when you take a long, you're using dollars in your account that you actually have. Whereas when you're shorting, you're using margin dollars you may or may not actually have. So if you lose too much, you can then go into a margin call with your broker, and they may force you to liquidate assets to cover the short losses. There's a good example here recently in the market. I forget the name of the hedge fund, but apparently they basically defaulted on a margin call. Couldn't afford to pay for their losses. They had to liquidate up to like $30 billion of assets. And the same thing can happen to you. If you short too much, lose too much that your account can't handle, you then will be forced to repay those losses in a lot of ways. A lot of times your account will probably be shut down. The broker won't want to do business with you anymore. So I guess, for example, how that might work is like, let's say you have a $10,000 account, you go out there and lose $15,000 on a short. Well, they're going to take your $10,000 away, make your account balance zero. But then they're going to make you put $5,000 back in the account to basically pay them back. Then they'll probably close your account and you'll be done for. Or they'll just take your margin rights away and make you be a cash account only, whichever comes first. So this is a very risky thing to do. I myself don't short long term. I only short intraday. I just short kind of like overextended longs, things like that. Or if the market's kind of more bearish, I'll short into the pops and stuff like that. But I don't short long term. I don't even short overnight. TD Ameritrade will actually charge you an interest fee overnight if you hold a short overnight with margin dollars. And the very reason for that is because a stock could have breaking news on it overnight or something, gap up 20%. Well, now you're probably going to possibly be under a margin call now because you got blown out of your short. So something to keep in mind. And so I do have a video link down below where I talk about kind of how you can figure out what stocks you can short. So I'm not going to talk about that much in this video. I was going to briefly just kind of discuss it here. But so you're going to see in TD Ameritrade or in Thinkorswim, you have easy to borrow stocks, hard to borrow stocks, and then none to borrow stocks. And what these basically mean is if it's easy to borrow, you can short it all day long. If it's hard to borrow, it has certain restrictions, meaning you have to have a certain account balance, things like $100,000. You got to pay a locate fee to short shares. Basically, you got to pay them for the right to short shares. And if it's none to borrow, it just means TD Ameritrade is not offering any kind of availability to short shares. You got to find another broker. You can't short it here, pretty much. So that's all I got in this one, guys. I'm going to go ahead and demonstrate in the next part, so stick around. Thanks for sticking around. Now we're going to demonstrate how to actually short something with TD Ameritrade and Thinkorswim. So I'm going to start here with the website version. This is pretty straightforward. There's only really one option you can even do on here. Then we'll spend more time in Thinkorswim going over that process. So if you have a cash account with Thinkorswim, or TD Ameritrade I should say, you probably notice you only have two options in your trade window. That's basically buy and sell. Once you get a margin account, you now can have buy to cover and sell short. These buttons actually do the same thing as buy and sell. I don't know why they put them in here. I guess maybe just to kind of give people more confidence in what they're doing, maybe kind of the positions they're taking, whatever. But basically the process here is going to be, so first you're going to sell short. So you put in all your quantities here. Market order, limit order, time and force. Put that order in. So once that gets filled, now you're basically in a short position. You've sold shares you don't own. So now you want to close that position up. You're basically going to do the opposite. Go to buy to cover, all your quantities, symbol, everything the same, and close that position that way. So this is the only way I know how to do it here in the website. Thinkorswim is way more dynamic, has a lot more options. So we're going to spend more time there and kind of get more detailed in there. But here in Thinkorswim, so the first thing you want to do is open up the active trader window. That's where you actually put your orders through and where you can see if stocks are easy to borrow or hard to borrow or whatever. So go over here to the right, go to active trader. So that now opens up. Mine's already kind of customized the way I like it, but I do have a video about this. I'll link below how to customize this if you're new to this. So I got my buy market, sell market buttons here at the top. We'll go through a position with those. I got my limit order buttons down here. So I got buy at the ask and sell at the bid. Those are limit orders. So I got those there as well. And here's our quantity of how many shares we're going to take. So the first thing I want to point out before we go any further with this is that active trader also tells you if you can even short the stock to begin with. So notice up here this ETB button, or well, whatever it is, the lettering, easy to borrow. So if I close active trader, this goes away. See, now it's gone. But if you pull active trader back up again, that now tells you it's easy to borrow. So I've intentionally picked one that's easy to borrow just for this example, because if we look at one that's like hard to borrow, we were not able to short it. So we'll go here and look at like Dolphin. This is an NFT. It's been kind of popular here lately. So this one now says hard to borrow. So this one here, say we try to short 1,000 shares. So we'll sell 1,000 shares. And it rejects it. Shares not currently available to short. And the reason for that is because I don't have the requirements to fulfill the hard to borrow, criteria. So that's going to be, I think the minimum account balance is like $100,000. You got to pay a locate fee, et cetera, et cetera. So I cannot short hard to borrow stocks, but maybe you can. So back here to Facebook. So this one is easy to borrow. That means there are no requirements. You can just short this thing all day long. So pretty much it's going to be as simple as opening up a long. So the long is you're going to buy shares, then sell them. We're going to do the opposite. So we're going to here first sell 1 share of Facebook. Put in the order there. So we sold 1 share at market. Average price is $288.62. Our position short is -1. And since the price is up a little higher than we bought it at, we are currently in the red in this position. So remember I said that as the price goes down, you make money. As the price goes up, you lose money. So in this case, if the price gets below $288.62, our P&L here is going to turn green. If it gets above that, well, there it goes. So now we're down to $288.60. Went green, then we pushed up to $288.65, and now we're going red. So basically, like I said, the opposite of a long. In a long, you're going to buy first, sell second, and you make money on it going up. In this case, you're going to sell first, buy second, and you're going to make money when it goes down. So now to close this position, so if a position short is a -1, that means that a long is a +1. So we're going to buy 1 share to net that position off to 0. So we come in here. Oh, now it just spiked up, so we're now in the red 15 cents now. That's fun. So now we're going to buy 1 share now. So we got to fill that 288.76. The position now is 0. You see the P&L open is 0, the position is 0. And our profit loss day on this is now a loss of 14 cents because the price went up. So that's buying and selling at market. Next we'll do limit orders, which is basically the same thing. It's just a different methodology of getting filled. You get filled as the highest bidder and highest offer or lowest offer, whatever it is. So first thing we're going to do here is we're going to sell at the bid. So we sell 1 share at limit. So we got filled there at 288.74. So again, we're in a position short of -1, and our average cost is 288.74. So in this case now the price is actually falling. It just dropped like 14 cents. So we actually almost got back all our money in that position. So our P&L open now is 12 cents. The current price is 288.62. So now we're going to buy that share back using We're going to buy on the ask here. We're going to do a limit order to buy that share back at the ask. So we're going to buy back 1 share. So we got filled there at 288.67. So we made back like 7 cents on what we lost the first time. And you can see now the position is 0. The open is 0 for all that position. So it's really no more complicated than that, guys. It's just you're going to sell first, buy second, and you make money when the stock is going down, not going up. If you want to see this kind of on a more serious position, like a day trade position, I do have a video down below, and I have more videos on my channel that you can watch of me trading live and shorting. Other than that, this is all I got on this one, guys. Go ahead and hit the like button, subscribe button if you like this video. Comment down below, give some feedback, ask some questions, and I'll catch you on the next one. Thanks, guys.